Hello everyone, welcome to the ichimokucharts.com daily analysis for the US dollar Japanese yen FX for Monday, April 27th. Well, you can see that this market has certainly changed character a little bit over the last day or so. We are still in a first time frame downtrend. We have a series of lower highs and lower lows. We also have a second time frame downtrend where we have a series of lower peaks and lower troughs. But we can see how the body size of the candle has tightened up considerably compared to the previous body size. Now that in itself denotes indecision. And what we have here is what's called a spinning top in Japanese candlestick terms. Now quite often they can lead to reversal of the previous trend, which in this case is a downtrend. But what we need to do is keep a close eye on the high of today's trading. So if anyone's thinking of going long for a short-term counter-trend trade, that high would be very important. But that might not be the best way to trade a market. We're probably better to trade with the second time frame downtrend, which would be down or to the short side. Now, if we look at the character of the cloud for a start, we can see that the cloud is still bullish. The cloud has twisted quite some time ago and the market is essentially bullish. And what we would expect to see is that if this market does retrace down to this area, then we'd want to see some support down either at the top of the cloud or certainly within the cloud and finally at the bottom of the cloud. I'd expect that we're going to see some sort of support down around within this area here. Now, interestingly, as this market sold off in a fairly strong downtrend, we can see that the pink line, the Kijun-sen, tried to hold as an area of support. Now, we know that when this line turns flat, it tends to attract price action, and it acts like a rubber band. The market moves like a rubber band around both of these lines, and we can see here that the market moved from an area of disequilibrium, which is essentially a trending move, and it tried to come back to equilibrium. This movement back towards both of these lines, and in particular the Kijun-sen, is a move back to equilibrium. Now, it looks like this market could be moving away from equilibrium at the moment into some sort of disequilibrium, although this spinning top candle certainly does tend to muddy our view a little bit of that. Now, interestingly, we also had the crossover of the Kijun-sen and the Tenkan-sen today, with the Kijun-sen being on top of the Tenkan-sen, which means that the market has basically turned bearish. Now, unfortunately, though, we have these two lines pointing in different directions, which are giving us different signals. But if we look at the green line, the Tenkan-sen, it's a very good indicator of what the short-term price action is doing. And we can see here that it's pointing down and pointing down at a very steep angle, which means that this market has quite a bit of downside momentum. So it will take quite a bit of effort for this market to pull up out of this short-term downswing. So essentially, watch the high of yesterday to be taken out for an end to this first time frame downtrend.